What's up, fam? I know most of you wanted to see where we might potentially top out at the end of this run on my next video. But I think it's kind of important to understand that there are multiple potential tops uh, depending on your patience. And what I mean by that is, like, I don't know your time frame. So maybe instead of like you setting a price target, you actually gave it a timeline, and that's fine to do. Everyone's position and style is a little bit different, but I don't know if you are planning 3 weeks, 3 months, 3 years. Each of these tops are as dependent on time frames and news releases as they are on each other. And so instead of just giving you this perfect scenario, I want to present to you, like, in order, the 4 or 5 potential tops for TLSS within a reasonable time frame. I'm sure there's going to be a day uh, where there's going to be some unimaginable profits to be had, like, from these current levels. But like, I know personally, transportation doesn't excite me enough to keep me in it for all that long. So these targets that I'm talking about are reasonable time frames. Pre reverse split, during the reverse split, shortly after it. I'm thinking like within the next year, year and a half, for the most part, to hit each one of these potential tops. Uh, just depending on how long you want to wait for it, if it even has to play out that long. Hmm. So looking at this chart, I can see 3 different ways that we could target the next price level. Now I'm going to use each one of them individually real fast and set an individual price target for each one of these different ways. Now we'll kind of compare them at the end and see if we can get an estimated price level to anticipate in the very near term. So the easiest one for me to see is the triple bottom formation that we've just recently or currently experienced. Uh, and it's just reasonable to expect this to be a triple bottom until we break this neckline of 0.016. Uh, we're still in the formation, so it could break and we no longer have it. Just like kind of last week, this candle right here, it broke our Elliott wave theory, or was it the week before last? Maybe in the week, whenever it was, it broke our fourth. I don't even know how to do math. So it broke our Elliott wave theory. But really, though, the lows of these candles, I mean, we was like extremely pushing it um with those anyways. So then that candle struck, and it was like, yeah, absolutely, like Elliott wave theory is over. The triple bottom could end that way as well until we break this 0.016. But it's just reasonable to expect it because each of these lows are uh, similarly spaced out, and they're all definitely well within 3% of each other. So we can use the calculations from that and set us a near term price. Went ahead and put it on a 1 hour time frame. But to measure a triple bottom or double bottom, you just take the percentage from your support line to the top of your neckline. Okay. So in this instance, it gives us 24% from the bottom to the top. So you take that 24% and you add it to the neckline of 0.016. That takes us up around 2 cents. So that's one price. That's one way to target a price. That's on 1 price target, but we need to see how many we can get to match up. If there's some corresponding targets, depending on different ways of analyzing it. But I'm gonna go ahead and I'm gonna put on here 0.02 for our first one. Oh my God, I didn't. If you've noticed, every single video, every time I'm doing it, I got in the habit now. I actually exited it out of the brush. It's the only one of the only ones you have to actually exit out of. If I remember to do it. All right, I can take these off here real fast. I should just stop the video while I'm doing this, but sometimes it just takes me so long to edit it and all that. So another thing I'm seeing is a descendant triangle. I was talking about a parallel channel, which was kind of this, which it happened there, then it broke out, it happened there, and then it broke out. But I'm also seeing like a descending channel. I don't really use that kind of stuff, but when you're down in this and nothing really is working out because you're trading so flat, it's just a good time to experiment with different things or refresh your memory on things or whatever it is. And so one of the things I had noticed was a descending triangle there. Now, oh man, look at me go. So descending triangles are typically considered bearish, but there really is a descending triangle that shows up at the end of significant downtrends to signify a reversal. And so that's very well could be what it is we're seeing here. And you treat a descending triangle just like you would any type of wedge as far as how that calculation goes. So for a while now, I've been watching this one here and was kind of thinking that this was it because it was hitting these pretty well and it hit this up here pretty well and then we broke and it could still be, but we kind of broke out of it and back to so on and so forth. So I kind of thought this was it for a while, but just recently I've kind of adjusted that a little bit and I'm seeing this one more. Yeah, I'll go ahead and hide this one now. I'm kind of seeing this one a little bit more, which takes us to the bottom of this candle here. And it has us like just recently breaking out of it, back testing it, and that should be our signal that we should be able to go from there. Because now we've done back tested that trend line. But so you measure it just like you measure any wedge, and it's going to be from your top most point of the wedge to your support line. So for this one, we got a total 27%. I mean, roughly 27%. Let me just go ahead and adjust it right. So there's that. Oh, that way that was right. Look at me. Second guessing myself. All right. Because of that candle. It blended into the thing. Here I am defending myself. 27%. So we can add that. We add that to where we broke out of the descending triangle as opposed to the top of it. So on this one, and this is just kind of rough, just kind of where exactly did we technically break out of it. So I kind of use this point right here as our breakout, and that looks pretty good to me. So adding 27% to it takes us right up to 0188, which was also about this resistance level right here. Point oh, ooh, getting sloppy with it. 188. Look at that, that's beautiful. Boom, 2 times in a row. All right, 0188. Just remember that's what that says. So from a descending wedge standpoint, uh, that would be our price target, 0.0188. And also Fibonacci's. There's really not a time that you can't use Fibonacci's. But I want to kind of do it a little bit of a different way this time. There's quite a few different ways you can pull a Fibonacci, and why not try to get as many of them displayed at one time to where you can see kind of the thickest cluster of Fibonacci levels meeting up. You know, like that would really really boost your. Oh my God, I'm drawing a blank here. I'll come back to that. Looking at the big bear market here. So from the May run to our end of the year lows, right? The 0.023 or the 0.236 that we really need to cross, just kind of like we did here. You know, we come up and we tested it twice, and then the third time we broke through it, back tested it, and we was gone. So that's a level that we still need to break through on here. So that gives us, I mean, that's 0.0218, just north of 2 cents. So that seems pretty reasonable. You know, if these other two are already calling out about 2 cents for a short term price target, like that sounds pretty reasonable to me. So what else do we have as far as Fibonacci's go? So I put this small bear. Let me turn this one off for a second. So I do this one, just the price levels just keep lining up. So I just don't rule this one out. So I figured with this one, what uh, levels may match up in the range that it is we're looking at. Are they significant Fibonacci levels, or just ones that really wouldn't make sense on a correction standpoint? So I started looking at it, and well, dang, you know, 702 is just shy of 2 cents. Well, that's pretty critical level, and it doesn't typically just bust through the 702 right away. I mean, there's times that it will and has, but it typically struggles there. And a good example of that is what we're facing right here. You know, how this whole level right here was a 702, as I showed in one of the daily threads. So, well, there, you know, 0.018, we should expect to see some resistance there, as we've talked about numerous times. So that's the 618. You got this, and you got the 702 right there at 2 cents. That's kind of why I wanted to keep using that one. I just keep finding ways that it just kind of works out and helps things make sense. I'll turn back on that. I just call them weird things just to kind of help keep them separated. I got to come up with a better way. Some of this stuff just trips me out. That's a pretty big cluster so far. I mean, that's only 2 Fibonacci's displayed, and we're starting to get a cluster of lines right here at the low 2 cent level. All right, so now we've also got our current bear market. Let me turn these up. I'm not used to, I don't do my home mouse very often. So we have our previous or our current bear market. I'm sorry. The 0.236 takes us right there, right at 2 cents again. So that level just keeps coming up, it keeps coming up, it keeps coming up. Turn these back on. Really got a tight cluster right there. It helps make sense of it to be our first major hurdle, right? Let me turn these off. All right, so we have our last bull run that we just had. Um, any of these will kind of work out. Well, there we go again. Just shy of 2 cents, 702 hits. So this is what I was referring to, 702 resistance. When we keep fighting it, and we finally kind of broke up through it, back tested a little bit. We lost it. I don't have to go through all that. So pulling a Fibonacci from this triple bottom structure, we have our golden ratio of 1.618 right there at 0.018 cents. Three times in a road. So my daughter says she don't say road, she says road. It's 3 times in a road. That's awesome. All right, so you take these different Fibonacci's that I've put on here and those Fibonacci levels with those price levels. You put all them on there plus the triple bottom formation, plus the descending wedge. You take all of that and you average it out, and it comes out almost dead on 2 cents. That's where we're gonna be looking to go next. Well, when we get there, my eyes are gonna be all over it. Let me go ahead and let me turn on all these Fibonacci's one time real fast. So right here around 016, you can see a cluster of a few, which we expect there to be some resistance there. Up here at the high 2 cents, that's a good way of getting, there it is, accuracy. I told you I'd come back to it. It's a good way to level up your accuracy some. So, I mean, it gets kind of confusing to look at sometimes, but you start seeing, especially, you have a 1.618 lineup with a 0.618. Well, I'm here to tell you, that's a significant, there might be a pretty good retracement after that. It may be a quick shot up there to that or something, and then a pretty steep retracement, because those are two significant Fibonacci levels that are meeting right there on top of each other. Oh man, it's 2 times. Shoot for 3. All right, let me turn that off. So reaching out to 2 cents is going to be, I'm going to be on edge. I probably won't post a lot, or comment a lot. I just be kind of just watching the chart pretty hard, because we've referenced it before, the similarities in these structures here, and I've even mentioned this before, but to give it a little bit more detail, once we got down here, and I mentioned before, I remember this day very clearly, and I really thought that was that was it finally. I expected this to kind of happen, um, but then it was going to continue this trend. So when it got down here, this happened. A lot of false hope, a lot of people buying in at that top up there, 2.5 cents, just to ride it down for a few months, all the way to a penny. so far, so we've hit, we've hit this there. We hit the spike at the end of that. Boom, the spike at the end of that. It's come, retrace, come and retrace. It dives off, comes dives off. Well, here's this little structure, and this structure looks different, but this is kind of where we could potentially just be sitting at. And this structure could continue to play out realistically. I don't think it to be the case, but I gotta point it out to you. So why 2 cents? Like, so this was 2.5 cents. I mean, this level got a little bit lower than over here, but it's still um in that same kind of price area. Eyes on level. See how I name that? Well, when this, all right, so you pull a fib to where that was thought to be the bottom. We didn't clear this 0.236. Okay, so on our current one, if this was to be the bottom and we're just gonna pull this move, clearing the 0.236, there it is again, 2 cents. That's gonna be a critical level to stay north of once we do cross it. If we can't, then I mean it still won't go to 1 cent. I don't care. It's not going to go to 1 cent. But worst case scenario, in my opinion, it could potentially go all the way down to 0.0115. Uh, I don't I don't want to see that happen. But that's the severity of crossing this, or we're in this same, but potentially in the same type of position. Um, Really, I won't really get too excited until we cross. I mean, so this was up at 2.5 cents, but here's kind of a resistance level here, and once we cross that right at 2.5 cents, then I'll start getting excited again. I'm gonna be excited to ride up to this, the accumulation, um, average, the potential like initial buy-ins that some of you may have had. 0.0145 is probably a reasonable just price average for combined all of us. I mean, this going to 2 cents from 0.0145, it's like 40%. So it's really not too bad if you just bought in. It's really not too bad if that's your accumulation average from these levels. If we start seeing that play out, maybe you can just make a little bit of uh, profit off of it, to kind of make up for your time down here and accumulate even more once we start hitting these levels again. So let me take this back off. Let me go back to this first one, and I'm going to show you just a couple more things. So not only did it not cross the 0.236, it extended just over it just a little bit, right? But it dropped about 95.5% total. That entire structure did. So what is that? Is there anything we can kind of compare on our current cycle? Well, I mean, obviously there is, or I wouldn't even be asking you, right? Let's put our fib back on. What is that for? Oh, I remember. I did this before, and I don't even remember some of the stuff I was doing. All right. So if it was to go just over the 0.236, which I kind of targeted it at that trend line that I put on there. So at 0.021, I figured that will probably be the top of our shortest time frame. Top. Man, I'm terrible at this. I feel like I've never done this before or something. In the shortest time frame, I feel like that would be the absolute top of it before the first retracement. Once we break this 0.016 neckline, right? I think the first significant retracement, which hopefully ain't too significant, which I'm fixing to get to, this should be the biggest retracement we see from here to this point. 0.021. Write it down. All right, so the last thing. So I pulled a fib from the bottom to the top of it, and to kind of see what went wrong. Why didn't it keep moving up? I mean, besides, news was released right in here. That wasn't news that we really wanted released. Uh, but outside of that, what levels did they release that news on? Well, to 702. That's when they did. Hopefully, when we retrace from these current levels over here, right? So you can almost guarantee, unless you're dealing with Elliott waves, which this was clearly not Elliott waves. You break that 0.5 on a retracement, and you're gonna have a pretty significant retracement. At least to the 0.382, but chances are closer to the 0.236 if you break that 0.5. And I really hope this time when we test 2 cents, our retracement comes down to this 618. Maybe that's kind of what I'm hoping. But so it broke 5 cents, which could have been an early telltale, but it doesn't necessarily have to be true. Then it went to retrace. It couldn't clear the 702. That was the end of it. So on our current one, if all that's to be the same, we get up to our 2 cent price level. This is kind of where I drew the top of this Fibonacci at, right? We get to the top of that 2 cent price level. We kind of want to stay above 0.017. Definitely 0.016, which, these levels are right on. Evidently every fraction is going to be an at least mental resistance level. So 0.016 or 0.017 or 0.018. Each one of them individually is going to be, whether there's a Fibonacci level causing it to be resistance or not, it's just a mental resistance for traders. So for these Fibonacci's to be hitting on those, so we hit 2 cents on that retracement. I don't think we can break 0.016. If we do, then that spells trouble ahead, and we're probably going to experience this, which is just a longer drawn out time. None of us want that, but in reality, as long as you have the patience and the time to hold on, then take advantage of this move, accumulate some more, and just keep holding on. So we wanted to stay above 0.016, but preferably so that way it's not so close to the boundary. I really would like to see it stay above 0.017. That would be tremendous, and definitely reassuring. But either way, whatever we retrace to, uh, we're obviously gonna have that rally afterwards, and how high that takes us is going to be just as critical. So say this, 0.618 or the point 0.5 doesn't break, and we start our relief rally, if that may be what it is, or the start of our uptrend, or this. So the 702 level is going to be critical to watch. Are we going to be able to clear it this time? We have to get through all retracement levels. 0.854 isn't an actual retracement level. Once we clear the 0.786, that's it. So we've just got to get north of it, and all retracements are done. It'll just be extensions at that point. So pretty close, 0.016 to 0.018, 019, and all of this is clear. We could start looking for our next price level after that point. That's kind of what I'm looking at. Near term, 0.021 be the top before our retracement. Hopefully that retracement stays above 0.017, but at least above 0.016. And then we're going to be watching 0.0175 after that to make sure it can be cleared and see higher price targets as opposed to lower price targets following the 2 cent rally we're fixing to have. All right, thank y'all.